Good morning, ARMR Insiders and everybody watching this morning meeting live stream at the ARMR Report. We call it the ARMR Investing Way. This is a virtual hedge fund experience. Chief Investment Officer. You got to think of yourself as a portfolio manager. I'm going to share information with you today using the ARMR algos for macro investing, when to put capital to work in the markets, when to take it out. We're going to talk about specific groups that we're using to fill out our portfolio and our investment structure where we think we're going to have alpha. Obviously, we're going to talk about the elephant in the room, pun intended, what happened with Trump and how does it affect different markets. I'm going to spitball with you a bit there. But at the end of the day, the key for us is to read and react to market behavior and execute our strategy. Now is a time to get rid of the noise around you. Put blinders on and execute. So whatever I tell you, whatever you hear anywhere else, the key on days like today, when there are major geopolitical events, when there are major political events in this country, the key is to put your blinders on, execute your strategy. I'm going to share my information, what I'll be doing, but at the end of the day, you have to execute your strategy. What's your risk tolerance? What are your goals? Figure them out. Put them on a whiteboard so you always remember them every day. Go look at them and be the smart money on your own. Don't count on anybody else to tell you how to run your own money. Okay? So, where should we begin? I feel like we should begin not with Trump at the moment, but let's begin with the fact that the risk monitor went green way before anything happened with President Trump. Last week, Risk Monitor went green. We've had core holdings in QQQ and SPY. We use the doubles, QLD and SSO. We've had core holdings there all the way up. And my discussions with you prior, over the last really 3 weeks, my discussions have been, will the equally weighted indexes confirm the mechanical bull market that we're in, or will they be the anvil around the proverbial neck that drags the leaders down? And I think what we saw last week, without a doubt, was that the broadening out of the mechanical bull market phase has begun. There's the equally weighted S&P. You could see it breaking out of a major pennant formation. Here's the equally weighted NASDAQ. It broke out actually a little bit earlier in the week. Let's switch over to small caps. Huge move in small caps last week. And let's put it on a weekly scale. That's a weekly breakout of epic proportion that's not even close to equaling the action in the big weighted indexes. Small caps have so much further to travel before this mechanical bull market is over. And the dinner bell started ringing last week. Okay, so the weekly moves are in. ARMR algos for all of our key indexes, risk on green. So we were yellow for about 3 weeks, even though the big indexes kept rolling higher and we had our core position there. I was carrying some cash. I had about 30% cash going into the day, maybe 15 to 30%, depending on portfolio I'm running, going into the end of the day on Friday. Going into the day Friday, and I filled that portfolio out. I have no cash now, risk monitor green. So risk monitor yellow means we've got to be cautious. We can keep taking some risk, but we're going to carry some cash. When we go green, we put that cash to work, and there are so many places to go to put the cash to work. I'm going to share with you the top groups where I'm putting money to work. Doesn't mean you should do that. Figure out your risk tolerance, your goal, what you're trying to do, and then go execute it. But I'll share with you some of the charts that I find very compelling. And we have, of course, ARMR algorithms that give us entry points. So these are the stocks. These are the groups where we've got the entry points. And this is where we think there'll be alpha over the coming days and weeks. Before I dive into these highlighted groups, let me remind you of the strategy, the core strategy here at the ARMR Investing Way. The core strategy is to read and react to price action and cut through all the noise. We'll get to Trump in a minute. The core value here of what we do when it comes to running money is to take risk when we believe the reward versus risk is optimal. But we always know positions we're taking could hit the stops. That's how bull markets end. You're going to have a moment where you put your capital to work. Everything looks great. And by the end of the week, they're all hitting stops. You have to respect that. You can't cry about it. You can't be upset about it. You have to execute. And that's what releases your brain from the inertia that so many individual investors face. You don't know when to put the money to work. You're afraid to put the money to work. You see stories about assassination attempts, and you don't know what to do. And what I submit to you is you execute a strategy. You understand that there'll be moments when your stops are hit, makes for a bad couple days or a week, and then you're in cash and you wait for the next cycle. And as long as you keep executing like that, net worth stair steps higher. It's not that hard, but all the noise around you makes it a lot harder. All right. So let's dive in right now. My point of that whole comment is everything I'm about to say is true unless our stops are hit, and I'll be back in cash. Okay. You want to join me on the desk? ARMR Insiders, 9:30 we get started. We trade all day. We're live all day. We're talking about stops, whether or not they're being hit. We're raising stops. We're booking profits at targets. That's the point of the live stream all day. So if you can join me on the desk all day, that's great. And we'll trade together, day trade, swing trade, and put on investment positions together. Okay. But let's dive in now to the highlighted groups that we think will add alpha. We have, let's just go over this real quick. We have, don't forget now, there's the weekly chart of the S&P. Okay. So we're on a melt up run. This is a mechanical bull market. We started it here in November. Okay. So let's just go over for you just as a refresher. Don't forget 4 portfolios that we're running here. And when I share with you a comment, let's say the ARMR blended portfolio, what that means is I run money for people, right? So I use these 4 strategies. Let's start over. I run my own capital and, like a family office. Okay. So I use these 4 portfolios to run family office capital. The next layer. So I have all of these portfolios going for myself personally. And then what I do for individuals I run money for is I take some from column A, some from column B, and create a blended portfolio depending on, to make this easy to understand, depending on how conservative or aggressive someone's going to be. Okay. So first thing let's talk about is the ARMR Macro fund. That fund is just based on the armrAlgos for the risk monitor. So when it's yellow, we're carrying a lot of cash, somewhere around 30 to 50% cash. When it's green, we're 100% invested. When it's red, we're 100% cash. That macro fund, that part of the portfolio. Okay. Someone trying to do this on their own, an ARMR Insider trying to figure out how to make a blended portfolio, you could put 25% in each and start there. See where you have comfort, see what works for you, what fits your risk tolerance, and then over time, you would over allocate in one direction or another. Okay. So risk monitor goes green, 100% invested. We already had exposure, like 50% of that portfolio, long NASDAQ, long the S&P. So we've got that core position. We've booked profits off the top. It keeps on running. And we have cash in the portfolio. This is what we did last week. We added small caps to the portfolio. Okay. And we used doubles. So we have UWM, which is twice the performance of small caps. We added the Dow to the portfolio, DDM, which is twice the performance of the Dow. Okay. We have in that portfolio Sprott physical gold and physical silver. And we've been trading that all the way up from the beginning back here in, March. Okay. So we trade around the core. We increased the size of that ARMR Macro exposure to gold and silver, and then we book profits and we put it back on at uptrends, okay? So trading around the core, just like we do the S&P and the NASDAQ. So that's part of our portfolio as well. What did we add to the portfolio? We have a couple positions. So sometimes what we'll do with that macro fund is have 100% in the indexes. This time around, what we're doing is we're seeding the portfolio, the macro fund, with a couple of group ETFs that we think can create alpha for us, okay? So along with spot physical gold and silver, we've added energy positions. We like the doubles, okay? So I just trade ETFs in this portfolio. So we've got ERX in the portfolio, double the performance of a handful of big cap energy stocks. This looks like a double bottom here, and I'm buying them early as close to the stop as I can. That's the red line in there, okay? And then Gush, which is another double of different, I would say mid-cap energy stocks. And you could see why we're doing this. If you pull out and look at this large pennant formation, this breakout, this pullback, the double bottom on the right below the 50 and 200-day moving averages, it's trying to come out. We'll see if it does. In order to make money in energy, in my experience, I have to buy the positions as close to the stop as possible. So we're in there right near the red line. It closes below the red line, I take it out. Not a big deal. Won't be a big hit to the portfolio, but the reward's enormous if we get on an energy trade correctly. And that's why I'm hunting this position to go along with our gold and silver position in the portfolio. Okay. Now let's swing over to an addition we made on Friday. And that's the cybersecurity stocks, and CIBR is the highlighted stock of the day for us. This is a ETF. Now, there's two ETFs I like, Cyber, CIBR, and Bug when it comes to cybersecurity. Okay, I don't know if you guys saw an announcement yesterday or over the weekend. Google was close to making a $28 billion cybersecurity investment in an Israeli company. I love them for that. So if you look inside here, you could do your own homework and see what stocks are in there. We own both. I like Bug and Cyber for my cybersecurity exposure. One reason why I like to go with the ETFs when it comes to cybersecurity is it's kind of funny in cybersecurity. If there's a cyber breach and you own the stock that got breached, the stock gets hammered, but the whole group goes up because it proves how important cybersecurity is. So I don't want individual stock risk when it comes to cybersecurity. That's me. That's just my personal preference. So some of you ask me, what do you think of this stock, that stock, at cybersecurity? Look, there's many cybersecurity stocks. They're breaking out. Some are better than others. I just like the group because my risk tolerance wants to extract the risk of individual blowups. I just want the groups. So that's the macro fund now, fully invested, big indexes, small cap, Dow, NASDAQ, S&P weighted, precious metals, physical, energy, cybersecurity. That's the macro fund. Let's talk now. Oh, and by the way, okay, this is good. The last position in the macro fund is I have a position on. It's not a large position yet. I could make this larger, and I may use what's happening now. So let's talk about the elephant in the room. Let's talk about what happened over the weekend. I'm not going to make this a political discussion. There's going to be so much noise, so much conspiracy theory. Anybody who's watched the video of the attack on President Trump should be disturbed about the direction of this country. Okay. And I can only hope that cooler heads prevail. The unbelievable, like, things just, this could be a lot worse, this conversation right now. If anybody watched that video, like literally centimeters away from the death of Donald Trump. If you watch the video, it's just unbelievable. in the milliseconds before that bullet made its way towards his head. If you watch that video, it's incredible. He literally turns his head to point to a big screen that he was talking to the crowd about, which had to do with the border crisis and illegal immigrants coming in. That literal turn of his head saved his life. It's just astounding. It makes you wonder about divine intervention. It's just crazy. Okay, that's all I'm going to say about it, because that's got nothing to do with us running money. How does it affect our portfolio? It seems to me, first of all, I don't think equities are affected at all. There's a trajectory for equities. It has to do with rates coming down. It has to do with the Fed lowering rates sometime between now and the end of the year. We're in a mechanical bull market, and there's no end in sight right now. And an attempt on Trump's life is not going to stop that. There could be short-term blips, but as I responded to an ARMR insider over the weekend through our Slack room about the question of what would happen to equities and where would futures be, my opinion was if there was any weakness this morning, the market will be up by the end of the day because the Fed will come in and support the market. Whenever you have political events, geopolitical events that rock confidence, the Fed comes in and starts buying equity futures. They've been doing that since 2008. It's the plunge protection team, and they get out ahead of it now. They don't even wait for the plunge. They just change the narrative. If the market's okay, the narrative on TV is everything's fine. So they don't even wait for the market to plunge and then protect. They just protect. So I'm not surprised at all that the equity markets are higher this morning. You know, Dow's up 0.5%, small caps are almost up 1%, S&P's up 1/3%. I'm not saying that's the plunge protection team. I just think that the market is following the path it was on. And there's only two assets that seem to be really affected by what happened over the weekend. Treasury bonds. So what's happened is, and that's TLT. So TLT is gapping down 1%, which is not a big move. Treasury bonds are all over the place all the time. I'm not 100% sure that Treasury bonds are down because of what happened over the weekend, but I can understand why they would be. There's a lot more uncertainty out in the future for the health of the United States of America. And so the knee-jerk reaction is sell Treasury bonds. I don't know if that's why, but that I can understand that narrative, right? There was an attempt on Donald Trump's life and serious questions about how a shooter could crawl on top of a building. I mean, it's a mind-numbing conversation, and it's like I think we've just lived through our Zapruder film. Okay, but luckily with better, a better outcome in the sense that Trump is still alive. But I can understand why the knee-jerk reaction would be to sell off U.S. Treasury bonds for the morning. I have a position on there. I might double that position on weakness if it holds up and reverses, because I don't really believe that that's a long-term move. The other asset that's immediately affected for some reason, which I can't really figure this out, is Bitcoin. I don't know what Bitcoin's got to do with what just happened in the world. Gold and silver are kind of quiet. I mean, nothing's really reacting like this. This is the Bitcoin chart. I'm looking at ARK only because, you know, ARK is priced right around where Bitcoin is priced, right? So Bitcoin is trading 62,700, and ARKB is going to open around $62.70, right? So it's the same price. So 62.70. So here's the breakdown in Bitcoin. This is the downtrend, and okay, it's going to gap up and break out of the downtrend this morning. We're going to have to watch to see where this thing closes. If Bitcoin closes above 60,000, let's say by the end of the week, then maybe you got something cooking, and I might consider positions that are affected by cryptocurrency. But Monday morning, off of the hysterical action from what happened over the weekend doesn't make a lot of sense to me. So I'm going to be on the sidelines there watching that action. And then, of course, you got Donald Trump, Trump Media and Technology. Okay. This is never an asset to own. People are going to trade this like crazy. This is not an asset to own for me. I'll never buy this asset. This is an emotional play based on what's going on leading up to the election. It's going to be up like 50% this morning. I'll let you guys take care of that. That's not something for the capital that I'm managing. Okay. So moving on. I don't think I've got, I think bottom line, we have our exposure to the market. We can go over a couple more positions that we added last week. We're long Biotech, for instance. We talked about this last week ad nauseum. This was a phenomenal breakout. I put out a couple of videos for you to discuss it. This is a weekly breakout on Biotech. That's just enormous. There's IBB, which are the big cap biotechs, and then XBI, which are the smaller cap. They both look phenomenal on a weekly level. So we're long there. Built a position in Illumina last week. I shared with you what I thought was a classic bottoming wedge breakout. That's the weekly chart of Illumina. Here's the daily chart, the Grail spinoff, right? And then I just took a small position in PacBio. I've been following PacBio, as you know, for a long time. I think thank God for stops. This is why I use stops, because I thought it was a great idea at 10. We got stopped out of it. It went to 1. All right. I still think there's technology there that's worthwhile. If small caps are going up and the leader Illumina starts to go up, this is like, almost buying a call option. They have cash to make it the next 2 years, and they're burning through that cash. Either they turn around the business or they don't. Either I make a lot of money from here or I'm out when it breaks below 1. That's all. So building out the biotech part of the portfolio, we've been doing that. Still own our leadership names like Palantir, okay? Pure Storage. These are some of my favorite positions. Trade Desk. All right, we're still on those positions. Now, look, we have absolutely earned the right. We own shares of IIPR here at around $90. We've collected a couple of dividends. Okay, things going higher. And we've earned the right to take a little bit of risk just for the fun of it. In cannabis, yes, I bought a little cannabis down here. There's the double bottom. That's a no-brainer double bottom. Okay, bought it as close to the stop as we can, which is a break back below 7. Now, you use your own stop, but this is how I execute. My stops, I don't take positions out till the end of the day or the end of the week, depending on whether or not we're investing or we're swing trading. If we're swing trading, end of the day. If we're investing, end of the week. So I talked about 4 portfolios. Macro, we went over, fully invested, indexes. Special situations, I just showed you where we are. Biotech, some of our favorite individual ARMR power play names are in there, okay? ARMR Invest portfolio. The Invest portfolio are the names. Primarily what I like to do, I'll just give you a couple examples. I like to pick off stocks that are beat up, total hysteria in financial news. AT&T is a perfect example. Stock was down here when we were buying it. Everyone talked about EPA fining them, and they, not going to be able to pay their dividend and all this there's too much debt, blah, blah, blah. We only bought it down here. We're making a ton of money and we're collecting a fat yield. That's what we like to do. We look to bottoming wedges on blue chip names. Okay. Couple more examples just to show you how this works. Altria, bottoming wedge on a blue chip name, 10.5% yield. I mean, this thing was down huge, down near the lows, bottoming wedge, 10.5% yield. Stock's gone through the roof. What else can I share with you? How about Newmont Mining? Okay. Bottoming shakeout. We paid $31.64 for it on March 1st. All we do is collect the yield. It was like a 4% yield back then, and it just goes straight up. We actually added to it in that green box right there. All right. Something more recent. How about Pfizer? There's a perfect example of what we're looking for. Totally unwound. the entire COVID move. Bottoming wedge hasn't gone up yet. Hasn't gone up. That's okay. I'll just collect the yield as long as it stays above my stop. And if they turn the business around, we'll be on Pfizer for years. Okay. Addition to the portfolio last week. It's already fully invested. I had about 10% cash, put the money to work in Gilead. All right. Here's Gilead. This is one of the top 5 names in IBB. So when I could find a dividend in a top 5 name in a group that's breaking out, stock's coming off of a bottom. They had a good announcement a couple weeks ago about one of their drugs. I think that stock goes back into the 80s, for instance, and I get to pick up a 4.5% yield. And I think the stock is going back into the 80s at the very least. All right. And let's just wrap up then with the discussion of our 4th portfolio, and that's the carry trading portfolio. Okay. So ARMR Invest, fully invested, right? We don't change that portfolio except for once a week at Friday at the close, weekly stops. And we have our special situations portfolio, fully invested. We'll change that on a daily basis because it's more of a swing portfolio. Macro fund, fully invested, group ETFs and index ETFs, usually the doubles. All right, so we can outperform dramatically there. And then we have the carry portfolio. So whatever you allocate, I mean, if you're on, you have to be on the desk with me all day if you're going to be carry trading because it's an all-day event. It's not something you come in and try every now and then. It's a grinded out affair every day, all day. It starts live at 9:30. We go to 4 o'clock and we're looking for trades like this. Let's go over them. So all we do is carry U.S. Treasury bills overnight. There's no overnight risk. And then we take triple S&P performance risk during the day. So I'm putting on a lot of risk intraday. I have no risk overnight, and I'm collecting yield, right, every day in Treasury bills. Here's the fun part. Brokerage firm gives me full release on those Treasury bills. I get to use brokerage firm capital to trade during the day, give them back the capital at the end of the day. They don't charge me margin interest. It's great, right? So we get to trade on their dime. This is how we do it. This is a classic ARMR entry point. When you have a huge down day like we had on Thursday in the S&P, the trigger, my favorite trigger, is when the top day trade, number 1 here in this green box, goes above the VWAP. So the black dots are the VWAP. This whole chart pattern you're looking at, every bar is a 3-minute bar. We use 3-minute bars to day trade. Okay, all the lines are an algorithm we call the ARMR Price Movement Profiler. Fibonacci extensions above and below. VWAP is the core to how we trade. It's an ARMR VWAP. Okay. Average true ranges, highs and lows. This is what we use to trade. Standard deviations above and below the VWAP. All right. So when we see a breakout above prior day's VWAP, these black dots, it's a no-brainer. You put the trade on. And in this case, it was just a clean rip all the way back up to the level of the prior day's breakdown. That's what made this trade really so easy. See that? This was the breakdown below VWAP on the prior day. That was the target of our trade. So we booked profits up here, A and the B, booked some profits here, booked profits again, raised our stop on our final position piece to where the C is, that pink box. We took our position off and booked all the profit in that green box. Didn't trade again. You could put another trade out. But I only look for high probability trades when rewards worth risk. The afternoon trade, I don't care about. We made so much money in the morning. I'm done. That's my day trade back to cash. It's actually my safe money. All I do is trade S&P risk and I hold Treasury bills. I get in there when I think I have a high probability entry point, rewards worth risk, and then I'm done for the day. So Friday is one of our favorite trading days. All right, look, it's 9:24. I got to get out of here. Get the live stream going for ARMR Insiders. I'll see you guys in 6 minutes. Everybody else, thanks for joining me this morning. If you have any questions, throw it into the comment section of this video. I'm happy to answer it during the day. There's a lot of crazy stuff going around. So if you're curious how I see something, I'm more than happy to interact with you. Everybody be safe out there today when it comes to trading and your own self. I wish you all the best of luck. in your activities. Can't wait to work with ARMR insiders. And remember, everybody, at the end of the day, whatever I've said, whatever you hear around you, find a quiet place, figure out your strategy, execute that strategy, and be the smart one.